going on, guys? And I'm back today with another video of another weekly analysis, market breakdown, whatever you want to call it. It is what it is. We about to get right into it, and we're going to start off with US30. So firstly, we're going to start off on the daily time frame, as we always do, because we got to always know what's going on higher time frames. So one thing that I was projecting to happen this week were these highs above these two equal highs right here to be taken. I wanted to see a run above it, but as you can see, we didn't really get that. I'm trying to undo it. Oh no, it's not working. But I wanted to see a run above these highs, which we did get before starting to trade back down. I wanted to see it push a little bit higher, but it is what it is. You're not always going to get what you want. So one thing that we got to keep in mind is that we had a very big bearish candle on Friday. As you can see, before we had a drop, we took these highs out right above here. Took these highs before dropping, so we got a liquidity grab for the fall. And now what is happening? You got to keep in mind that right here, this last bearish candle before this up move, which is a bullish order block, that's where we're trading at right now. So if price is likely to keep on going up, we will see it from here. So let's just mark up this daily order block overall, because this is a big one. And then now we're going to move on to the lower time frame. So we already know overall we're still bullish, because we did want to see these highs get taken, and we also want to see all-time highs get taken, because as you can see, this is the all-time high for US30, which is pretty sure it's 35.101. Yeah, if you look in the top left corner, 35.101 is the all-time high, and the highest this candle got right here was 35.96. So we came close to the all-time high, but not necessarily there. So that's one thing we want to keep an eye out for. So now we're going to move on to the 4-hour time frame. So since we know we're overall bearish, we want to keep in mind what is the market going to do next, and where is it likely to go. So let's move these over. I'm going to mark it up as daily order block, just so we know, so we don't get confused, because when you have a lot of lines on your screen, it could confuse you at times. So you always got to understand where in the market you're at and what it's doing. So as of right now, price is trading at the high of this daily order block, and the low of this daily order block is all the way down here. And another thing that's right here, this is the high of a 4-hour order block right here. And why is this a 4-hour order block? Because it's the same thing. It's the last down candle before this up move, and it just happens to be the bottom of the daily order block also. So this is a lot of confluence with these two areas right here. So we have that marked up. So what's the next thing we're going to do? We're going to pull our fib from this low down here. I'm going to use this low, use our normal fib, and we're going to pull it to the top of where price last closed at. We're going to pull it over. And where is this at? It's close to this 4-hour order block also. So there's a lot of confluence in this area as of right here. So more than likely, price is going to keep on falling. So this daily order block is more than likely going to be pushed into farther before having that push upwards. And another way that I know that from what I'm looking at is right here with these two candles. The gap in between created an imbalance or fair value gap, or inefficiency, whatever you want to call it. But overall, what we know is that price will more than likely try to continue to fill in this area before possibly going higher overall. It might not happen, but as you can see, there's a lot of confluence in this area right here. Why? Because we have this imbalance, which is formed by the gap between these two candles. So that's basically what I'm looking at as of right here. There's another one right above it, right here. There's one right here, which price is currently almost filling, but I'm not going to draw that one because more than likely it will get filled. So what I'm going to keep drawing is this one down here. So we have a lot of confluence here. We have this imbalance. We have this overall fib long pulled from the bottom. I'm going to put these here just so you know where the fibs are drawn from to this overall high. And that's basically what we're looking at from the overall 1 hour, not 1 hour, daily and 4-hour perspective. Basically, we're expecting price to have a retracement to fill in this area before possibly going to see higher prices. But before that happens, you got to understand where the daily high and the daily lows are, because you got to always know at all times where your daily range is. So this will be our daily high, and if you don't know what these are the sessions. So this is showing you what each day, so from here to here is one day, here to here is one day, here to here is one day. So if you look at only to the right, this Friday, the highest point it was 35.94, and the lowest point it was right here. So we're going to mark up our daily highs and daily lows. Understand trend and you understand market structure, then you understand that price likes to follow each other. Because if you look at candles like this, bullish candle, what happened? Next candle, bullish candle, broke highs. Then we had started ranging, broke lows, but then we had a bullish candle, next candle, bullish candle. Same thing here, bullish candle, another one, bullish candle, the next one, bullish candle, next one, bullish candle. Same thing here. And it's just it happens. Same thing here with bearish candle, next candle wasn't bearish but did break the low. And that's just how the market moves. And the same thing right here, last example, bearish candles breaking lows, bearish candle breaking lows, bearish candle breaking lows. Started to range, not breaking lows or high, but then what happened? Continued that trend, breaking lows, and that's just what happens. So if you understand that overall the last daily candle was bearish, and you're overall expecting price to come down to these lower prices, you can expect more than likely that the lows of the daily ranges low will be broken more than likely than the daily high. So another thing you want to keep in mind now is what if price wants to retrace, because if you understand what's going on in the market, you understand that the sell side liquidity, which was laying right under all these lows, was taken out. So we understand that it grabbed liquidity, and we understand right now that price is starting to form an equal low. So it could be forming an equal low to possibly have a retracement of some sort, to possibly then see these prices to maybe range to possibly go even higher. That is something we could see. So now we got to understand what if price does push up, because we got to keep in mind what is going to happen in both scenarios. What if price does push up? So now we got to understand where will it likely go. So what do we see right now? In between these candles right here, these three candles, what do we see? We see another imbalance. So what does that mean? That means there's liquidity here in between. And if you want to understand more about imbalances, I have a whole video separately on that. I'm not going to get into it. If you want to understand it, just go watch that. It's pretty well explained. But basically now we know there's an imbalance here. We also know there's one right here, from here to here. So there's two imbalances. I'm not going to draw them both. I'm going to leave the highest one, because right here we also have in Confluence, we have this 1 hour order block, the last up candle before the downtrend that broke these lows. So let me just change this. I like to have them all laid out differently, different colors and different lines, just so I understand what I'm looking at. So now we understand there's also an order block up here. So now we have a lot of confluence in this area also. So now I'm going to move down to a 30-minute time frame. And the last thing I'm going to do is I'm going to pull my fib from this high, the highest point we had, to this low. And then what do we see? We see more confluence in this area. We have this imbalance in confluence with close to this order block, is not directly there. In this case, on the 30-minute time frame, you could have this 30-minute candle as an order block, and it will be in confluence with the 79%. But this is a very low time frame, so I'm just going to keep it drawn from the 1 hour. I'm going to push this up to here. So now you see there's a lot of confluence in this area for price to possibly retrace to then possibly keep falling lower. Mind you, this might not happen, but you got to understand what if it does. You got to understand if it does retrace, where are you looking for the sell? If it does fall, where are you looking for the buys? And the last thing, if you guys watch my previous videos on breaker and understanding breaker blocks, you understand that it's basically an order block that gets traded through. So where would the order block be? In this case scenario, the order block would have been right here. because if you go back in time and look at it like this would have been an order block you possibly could have been looking for rejection to possibly trade off of into the upside. But in this case, it didn't, and it traded through it and kept going lower. So now it becomes a breaker block. So now if you also look at the Confluence, this is in the same area as all these other confirmations. So now we have multiple confirmations in the area. This 1 hour order block, which is right here, this last up candle before the downfall that broke these lows right here, and that also broke these lows down here. So now we know that there's confirmation right there with this, the order block, with this overall breaker block that hasn't been traded to yet, and we also have this imbalance in the market. So there's a lot of liquidity basically in this area for price to possibly continue to retrace to, maybe range with whatever it's gonna do before falling to fill in this area, finishing by taking out these lows by making sell side liquidity, because if it does retrace, this will create a double bottom. This will make a double bottom with this low and this low. And what do we know about double bottoms? That's creating liquidity in the market, because under all this is people's stop losses from buying and people's sell stops from trying to catch the breakout when it does happen. So that's just everything you want to keep in mind. That's why I have sell side liquidity here, because I have a feeling price is going to retrace from the way these candles were forming on the 1 hour. If you also look at the 4 hour, the 4 hours bearish, but when the market opens, I'm not going to be going off of 4 hour candles. I'm going to be going off of 1 hour candles, because that's when the market opens. You want to look at what's happening right there and then. So that's just something to keep in mind. So my overall perspective of what I think is going to happen, price will have a retracement of some sort to this area to possibly fill in these areas, possibly come a little bit lower to this 4 hour order block, possibly range before overall trying to take out the highs that we've been wanting to see taken out. And mind you, this might not happen. Price could likely start retracing, doing whatever it's going to do, and keep going up. But you always got to have an idea of what you want to see in the market, and you want to have a bias, whatever it is, because you don't want to just go into the market just not understanding what's overall going to happen. So let's just take all this off and look at the weekly time frame also. Overall, we know on the weekly time frame we're still very bullish, as you can see from this candle right here, this strong bullish candle. We're still very bullish. So one thing that could happen, this bearish candle is a overall weekly bullish order block. So one thing we can understand, price could likely try to trade back into it. And where is that area? Remember, I'm gonna change it. I'm gonna change the color just so you guys can see it. I'm gonna change it to orange. We're gonna go back to the 4 hour. Where is that at? It's in the same area as all the other confluences. So now you guys understand the confluence that I'm talking about. I'm gonna mark this up as a weekly order block, because now you guys see there's multiple confirmations in this area for price to possibly reject and continue higher off of. And overall, it can keep coming lower and keep that uptrend, because overall you understand on the weekly time frame and the daily, we're still overall bullish. And even on the 4 hour, we will still be overall holding that uptrend and creating higher highs and higher lows. So it all can happen. And the reason why the price might likely do that is because it's creating more liquidity with these highs, these highs, these highs, and is just creating more liquidity to get ready to take the market to see higher prices. So that's overall what I want to see with US30. I'm still very bullish on US30, as you can see from the monthly and the weekly. We're in a strong bull market, and it's very clear. It doesn't take a scientist to understand that we're going straight the fuck up, straight up. And I honestly don't see a chance of having a strong retracement anytime soon, for the simple fact that these weekly candles that were being printed last 3 weeks have been very strong. So we're just gonna trade what we see, and we're overall gonna keep that overall uptrend and keep that same bias. So that's really it for my US30 breakdown. This is a simple, not simple, it's kind of in depth, but if you understand the concepts that I teach you guys on my channel, and you understand these concepts and and how they work, understand liquidity, understand where the market is likely to move to, then there's many things that just make sense. And the last thing I'm gonna put right here is that I'm just realizing, like I said, remember I said a breaker block is an order block that got traded through. So if you understand an order block, you will understand right here is a bearish order block, and price, when it retraced to this area right here, it could have likely started to reject to possibly go lower, but in this case it didn't. It kept going higher. So what does that mean? It became a breaker block, and as you can see, price came and rejected it right over here before trading higher. And where's price as of right now? We're in that area also. So if we do have that retracement upwards, we know that if it could respect this area to potentially keep going higher, to have that retracement, to then break it, come lower, to possibly see higher prices. So that's overall what I think is going to happen with US30. This is my analysis for it. Nothing crazy. Overall bullish. You just got to trade it by the day. This might not happen to the pip, or it might not really happen what I'm expecting, but that's why you just overall have to have a bias. So when you go into the upcoming week, you understand what's overall, what you have an idea what's going to happen. You're not going in blind, because it's great to have an idea. If you're going in blind, you're not going to know what you're looking for. If you know what you're looking for, you're not going to chase the market. That's the last thing you want to do. You don't want to chase the market. You want to have the market come to you. Let me repeat that again. You want to have the market come to you, because if I have all these ideas of where I'm expecting price to have rejections and where I'm expecting price to have sell-offs or pushes off of, then it's just only benefiting me, because I'm not gonna be here like, oh, where should I get in? Oh, where are my targets? Oh, where am I gonna have my stop losses? Because I understand overall from my analysis what price is likely to do. So that's really it. Hopefully you guys found this video helpful. I hope that if this does go well, you guys could profit off of it. Don't go in blindly. If you don't think this is gonna happen, don't take trades off it. You gotta trust yourself. Don't trust me, trust yourself. Because even if what my analysis works and yours doesn't, you're going to learn from that. And experiences are key. That's how you learn in this industry. So if you found this video helpful and informative, if you found just it helped you overall understanding the market, understanding how I trade, like, comment, subscribe. Links in my description for my free Telegram chat. And I'll see you guys in the next video.